Hey there, YouTube family. This is the Stocks with Josh show. Thank you guys for hitting the like. Say hi, throw a heart in the comment. I'm going to be talking about Tesla and I'm going to be talking about NIO. I just got done with the Earn Your Leisure event in Atlanta, Georgia, which was an eye-opening event for so many reasons. They had incredible guest speakers, and I'm going to take some of the gems that I got from that event. I'm going to share that with you guys today. I'm probably going to share some of the things I received from that event over the course of the next couple of videos. A lot of gems to digest, a lot of things to digest, process, think about, and I'm going to share them with you guys. And I'm going to be making a video this week about Disney because something interesting. We got to a very interesting price point in Disney. I want to point it out to you guys. We got to make some decisions about buying Disney right now. But most specifically, I wanted to get into the fact that NIO is reporting tomorrow. I wanted to share some analyst overviews of NIO. I want to share my view of NIO, and I want to share what the charts are telling me about NIO. They're going to report tomorrow morning before the market opens. I took a position. I'll tell you guys right up front. I took a position, and I'm going to let you guys know when I cover NIO right now whether it's going to be a call or a put. I'm going to be on vacation here for the next week with family, but I will be trying to make some videos every other day. Right now, I'm staying at the Animal Kingdom Lodge and Resort, and you can see behind me, no giraffes are happening to be walking by right now, but that's where all the giraffes have been this morning, and the zebras. It's been a lot of fun watching them, getting good quality time with my family, and we've got some friends that have joined us. Let's get into these markets real quick. Okay, so Mark Mineravini, he's a guy that I follow on Twitter, and I liked something that he said as far as a rule of thumb. Guys, the market's actually been going up over the last couple of days when a lot of people expected it to go down, and I expected some more downside, and yet we got some upside. But we're still in the month of August, and we still have September ahead of us, and both of these months can be extremely dangerous for stocks. And so we can't get too bullish just yet. We're still in a correction mode. We've hit a little bit of a bounce. And Mark Mineravini gave an opinion as to when it might be safe to enter back into some plays. He basically said, watch volatility by watching the VIX. Now, I've talked about the VIX before. It measures volatility in the marketplace. And he said, when the VIX is around 26, twice where it was when it hit its lows. So basically, he's saying the low of the VIX recently was 13. He's saying when it doubles to 26, that's when there's been an adequate or sufficient enough sell-off in the markets to begin to get back in. We're nowhere near to that level. And he also commented that what he's seeing in the charts looks like classic distribution. And right before heavier selling, you see the pattern of classic distribution. That's what we're seeing right now. So we came down hard. We've bounced a little bit, and now there's some sideways distribution and some subtle selling, which could very easily lead to heavier selling, which I think we still have that opportunity in August and September. So be cautious. I mentioned that at the beginning of my video last week. I said I am approaching the markets cautiously, strategically. One of the things I'm doing is I'm decreasing the number of trades that I am in. I'm also decreasing. I don't have any big share positions. All of the positions I'm currently running are call or put options. They're basically strategic scalps, and I'm not holding them very long. I'm pretty much holding them intraday. My second reason for holding them intraday is that I'm on vacation and I can't give it the amount of attention that I would like. But I'm still got my phone with me. I'm still opening and closing positions. I want to just mention to you guys that we have launched a Patreon, a Discord page, the Stock Squad, Stock Up with Larry Jones, a fabulous momentum trader, Stock Mo, who brings a lot of knowledge about the market, and Keenan Grace, who brings a lot of knowledge about options as well as technicals. And then, you know, I'm a technical guy. We've launched that and already seen a huge influx of people participating, and I've been enjoying the chat, and we're going to see more of us in there. You guys know I'm on vacation this week, so I'm just going to be coming in here and there, but we have incredible plans for the Discord, and I want you guys to check out the link. I'm going to leave that as the top pinned comment in this video so you guys can join us in that journey. It's going to be great. You're going to get all four of us in one Discord, which is really unique. Okay, one of the guest speakers that I had the opportunity to hear this week in Atlanta was Kathy Woods. And, you know, I'll admit to you guys that I'm not a huge Kathy Woods fan, largely because I viewed her as a perma-bull. She just has extremely bullish views of various companies and stocks. But, you know, I was sitting next to Keenan on my right, Larry on my left, having a great time. You know, and Keenan kept saying, you know, Kathy, she's just early. She's just early. That's the only thing you got to keep in mind about Kathy. But I did appreciate one of the points that she made about AI stocks. And I'm going to talk about some AI stocks that she mentioned, not in this video, but I'm going to talk about a point that she made about AI and Tesla. Now, if you've seen the news recently, you've seen her say that Tesla is one of the biggest AI plays in the marketplace. And when I first heard her say that, I actually did not agree with her, but I did appreciate the point that she made about Tesla when she was talking about AI the other day, when she said it's really all of AI is not about the capability that AI has. It's about the data that they have the ability to process. And that's when she got my attention, was all of the data that's constantly being accumulated by Tesla right now, which based on proprietary software that nobody else can really get their hands on. And Tesla is so far in the lead, and that became a valid point for me that yes, Tesla's got a pool of proprietary data for their autonomous driving, and it's based on proprietary software, and they're going to be able to do something with that, which makes them a far more valuable company. I'm going to share this quote with you guys. Full self-driving, or FSD, driver assistance software will eventually get good enough to turn all Tesla vehicles capable of running the software into robo-taxis. Now, you guys, we've been hearing about the robo-taxis, but it does seem a little bit closer, which could be the reason why Tesla stock has been climbing so much over the course of 2023. Tesla uses AI to train and teach its software to drive. I think it will be the single biggest asset value increase in history, said Musk at Tesla's 2023 annual meeting of shareholders on May 16th. And so based on what Elon's saying, and I think that obviously Kathy Woods is agreeing with him, these guys are not necessarily an AI company in the traditional sense of an AI company, but they have the ability to utilize AI to pursue, to crunch all this data that they and they alone have to produce something that could be revolutionary and disruptive, and I think it's going to be. So I'm going to give you guys some fresh technicals on Tesla. Guys, where have we been? We've been above that 230. I always give you guys these supports and resistances. Now it's changed because supports and resistances are based on moving averages. So the current level that we need to see Tesla stay above to remain bullish, it used to be 230. Now it's 234. We've been seeing some nice profits in Tesla calls using this simple area of resistance and support. We get in it if it's above 230. We get out if it's beneath 230. But that number has now become 234. And, you know, I get mostly 99% love on this channel, and I get people telling me how much money they're making. When I was at the Earn Your Leisure trade show, I literally had some people standing in front of me with a tear running down their eye talking about the profits that were made watching this channel, and it was extremely moving and extremely motivating for me, guys. But I want to take a brief moment to comment on some detractors, some people that when Tesla came down to 225, and I told everybody that was a target area of entry, and I even said before it got to 225 that it could flash down as low as 211, and the following day it went below 225, flashed to 212. I doubled my position, actually tripled my position, and then it's been up for weeks. The last 2 weeks, it's been up above 230. We've been between 230 and 240. You guys have to show some patience. The fact is that if you had even bought at 225 and you bought correctly and you didn't panic and you trusted the technicals, you would be in wild profit. That's what we've enjoyed with Tesla. It's one of the reasons why I'm still talking about Tesla, is because I'm still making money on it. When it stops becoming a payday for me, I'll probably move on to something else. But right now, Tesla continues to be a payday. So here's the level that you guys need, that we need to stay above. It's sort of the get in or get out level for me. That's $234. We really can't afford to close on the daily candlestick chart beneath 234. We can flash beneath it, but we got to get back above it. When we get back above it, it makes sense to be in the stock. It gets tricky doing that because after hours and pre-market, it can move wildly, and so you've got to keep an eye on it. But largely, if we open tomorrow above 234, you want to be in it. Now, let me give you guys a quick range of where Tesla could move to. It could go as high as $261. That's the top of the current trade range that we're in, and the bottom of the current trade range that we're in is back at 212. Neither would shock me. 234 is the deciding line. If we're beneath 234, I'm going to be looking to go in puts down lower, eventually to that 212, looking for another bounce there. If we're above 234, I'm going to be looking to be in calls to push up to 261. Let me know in the comments, guys, if that makes sense to you or if you view the technicals different. We'll keep talking about these plays. Now, I'm going to give you guys some thoughts on NIO, which I think are going to surprise you guys here. They report tomorrow morning, but let me take a quick station break for the MooMoo investment app. If you're in Australia, Canada, or the US, this is a zero commission cost trade app, and they're going to give you free stock for opening and funding an account. In the US, the offer is different for each country. Right now, you can only pre-register in Canada, but you'll be able to deposit money and trade very, very soon. Right now, it's just opening up to that market. You're going to get offers for free stock out of there as well. But the current offer that is available for people here in the United States is to receive up to 16 free stocks as well as a $50 cash bonus. Now, each of those stocks could potentially be worth up to thousands of dollars each. You're going to get a lot of them are going to be under $10, but there's the potential that each one could be worth up to $2,000. But I use MooMoo because I love their tools. Plus, I host a chat group on the app called Stock Josh Fam. So get your free stock, get your free cash, start investing, and then come find us in the chat group where we talk stocks and crypto every single day. NIO has been obviously a big pain in the butt for a lot of investors. It fell 70% in 2022. It wrecked a lot of portfolios. One of the gems that I was taken away from some of these heavy hitters, you got to protect capital. You can't afford to lose 70% of your capital in a downturning market. You have to use stop losses and you have to stay safe. You guys know that I share that with you. A lot of you guys held on to NIO and you got wrecked in 2022, but we're in a different environment. NIO still has some headwinds, but it got beat all the way down and now we're around 10 bucks. Some of the lows below 8. We see it recently came up to $16, which was something on this channel which had been predicted before it happened. I saw the run up coming and I told you guys from $9.50 to $10.50 to $13.50, and then I said, guys, we're going to finish up at $16. That is exactly what happened to the T. And then when it got to $16, I said it's time to get off the ship, unload, sell, and that we were going to come back and find better support. And that's where we're sitting today at around $10.75. Now, I think that it's actually quite attractive from a technical perspective. But let's take a brief moment and let's hear one of an analyst talk about it from a fundamental perspective. I'm going to read this to you guys. We're downgrading NIO to a sell. We think the company will face an increasingly difficult macro environment in China and aggressive pricing from the competition. We know that's Tesla as well as others. Expectations for gross margin percentage growth in 2023, they remain low after price cuts and ramped production output, and we don't see the stock outperforming in the near term due to competition and weaker than expected demand despite new releases. We recommend investors exit the stock at current levels as we believe investor money could be placed in better positioned names to outperform in the second half of 2023, writes Tech Stock Pros. Okay, now this makes a ton of sense, but I have a problem with it. This is the type of warning that analysts needed to give at the beginning of 2022. And I've been doing this for a while, and what I notice is after the stock is beat up, after it's way down on its lows, this thing between $10 and $8, I mean, it's down on its lows. Now these analysts come out and say, oh, I recommend selling it right here. But oftentimes, after it's gotten beat up, and when all that's been priced in, the beat up has been priced in. That's why it's a $10 stock right now and not a $40, $50, or $100 stock, is because the beat up and the beat down has already been priced in, and then they tell you to sell it. Well, I'm actually going to surprise you guys. I read a bunch of analyst reports, and all of them were probably correct in the struggle that NIO was facing. But I feel like the struggle's been beat into it. Could it go lower? Yes. The question is it going to go to zero? Is this going to be the next Mullen? I don't think so. at the moment. I think that it's actually okay, and the fact that we came down and had that recent low, and then we came up and we made a nice little high here in a local high in 2023. To me, that showed that this stock had some life to it. And so I'm actually slightly optimistic going into earnings. But let's just look at a couple of the fundamentals that we still have to deal with and what exactly you guys were looking for. NIO has only beaten earnings per share expectations 12.5% of the time, which is a very, very low number. These guys have not met the earnings per share expectation very much at all. There have been 3 earnings per share revisions to the downside. So not only do they not meet expectations, but they're constantly giving a bearish, negative, or downgrading earnings per share guidance. And so obviously this is why the analysts are struggling with the stock. All right, but let's see why I have a different sentiment for the technicals. It's recently pulled back 35% from its recent high of $16.18. It's sitting on support at $10.85. If that were to break, then the next area of support would be around $9.50, which is very possible, but at that point, I would consider it a buy. So going into the announcements tomorrow, even if this is bearish, what I'm expecting is a dip potentially down to 950. And I'm not telling you that that's what's going to happen. I'm going to give you guys some scenarios. If it dips down to 950, you might easily see it recover because you're going to see that in this bearish environment, all the short sellers are going to have to close their positions. Remember, they close their positions by buying, and they're going to want to sell into bearish news, and tomorrow's earnings could be bearish news. And so it might not have that dramatic sell off because, again, a lot of the bearishness is known by the market. It's already priced in. And so really what you're going to see is you're going to see short sellers selling into that bearish news, taking profits. Now, I have a local target or a potential resistance level above the current price of around $12.20. So if they had a better than expected report, it could shoot up to $12.20 fairly easily. And even if it was in line with market expectations and they didn't do well, I think that we could see an initial drop down to 950, and we could actually see a pop up to 1220. Put that on your radar, guys. That's how I'm going to be. And yes, I'm going to be playing some call options on NIO, very conservative, kind of far out. I'll be looking to take profits on those if we got to that $12 mark. I wanted to leave you guys with that today. I've got some other great content that I'm going to be preparing. Don't expect too many videos this week. I'm probably going to be doing a video every other day. I've got family in the other room playing cards as we speak. They're wanting me to join them. But I wanted to get something out for you guys. I wanted to share the plays that I'm in and the way that I'm handling this market. So, hey, thanks one more time for hitting that like. Hit the subscribe and the YouTube all notification bell to get content like this. You guys know I go over the charts. I give analysis. I give trades every single day for stocks and crypto. Appreciate you joining me today. As always, peace and blessings, my friends. See you in the next video.